In this video, I'm going to be sharing with you my exact SMC smart money concept strategy that has made me over $50,000 in the last 30 days. This is also the exact SMC strategy that all of the members at Toto Capital trade within the markets. Here are some live results of the members that trade this exact strategy. I'm going to share with you every single step. There are 3 steps in total. We will be starting off basic, but as we progress, we're going to be getting more and more advanced. I can promise you, if it is quite simple at the start, by the end of this video, you will have learned some very advanced SMC concepts. And at the end of this video, I'm going to share with you a case study of a trade that myself and all of the Toto Capital members executed within the markets. You're going to love this video. Okay, so let's just jump straight in. And step number 1 is to identify our daily bias. It's very, very important. And what I've done is I've created an objective framework in order to identify the direction that we're looking at trading for that day. Okay, what I want you guys to use is the 50, the 100, and the 200 exponential moving average. Okay, when these are in order, so when the 50 is greater than the 100, which is greater than the 200 exponential moving average, then we are only looking for longs on this market. I know this is very, very simple, but please pay close attention. When there's a large distance between the 50, the 100, and a large distance between the 100 and the 200, that indicates to us that there's strong bullish momentum to the upside. Therefore, we are trending to the upside. So when you're trading a trend continuation strategy, it's extremely important that you, of course, are trading with the trend. Okay, so step number 1, identifying our directional bias. We do that by ensuring the 50 is greater than the 100, which is greater than the 200. So when these are all in order, that indicates to us that our directional bias is to the upside when the 50 is on the top, the 100 is in the middle, and the 200 is on the bottom. If they were the other way around, then we would be looking for sells on the market. Very, very simple and a very objective way to identify our daily bias. Okay, so now we can look at step number 2. Now that you understand how to identify your directional bias. And step number 2 is getting a little bit more complex, okay? And this is involving the ICT Judas swing, okay? A lot of people overcomplicate this, and it is actually very, very simple. Essentially, what we want to see is a liquidity sweep below the previous session's low. For example, if we're during the London session, we want to see a sweep of liquidity during the London session, sweeping below the Asian session low, okay? Because the London session, the previous session is the Asian session. Therefore, we want to see a run on liquidity of all of the sell side liquidity that is resting below the Asian session low. So that's during a kill zone, a run on liquidity of the previous session. For example, if we're during the New York session, we want to see a run on liquidity of the sell side liquidity of the London session. So if we're during the New York, the previous session's the London session, therefore we would want to see a raid on liquidity of that previous session's low, okay? Because if you just think logically on what's actually going on right here, is anybody that was looking to get long in that previous session, their stop losses are going to be resting below the session low, okay? So this is essentially where the liquidity is. It's sat below the previous session's low. So the reason why we want to see that manipulated is because when price does come down and does deviate below, okay, that's going to trigger traders thinking this is a breakout, thinking, wanting to go short on the market, traders that are uninformed that the directional bias is actually to the upside, okay? So they're going to look to go short on this breakout, on this retest, okay? And them sell orders will be matched up with the institutional buy orders, okay? So the enticing traders to go short will provide the liquidity, provide the fuel, and actually to move the markets in the opposing direction, where price is more likely to head, which is to the upside, because momentum's to the upside, the institutional draw on liquidity is to the upside. In reality, a simple way to put it is simply the trend is to the upside, okay? So you want to keep trading with the trend, okay? So this is the ICT Judas swing. In a nutshell, we simply want to see a run on liquidity during a kill zone of the previous session's liquidity. That will provide the fuel in order to move the markets in the correct direction, which if your directional bias is to the upside based on the framework of step 1, then that direction will be more than likely to the upside. So that is the liquidity sweep, and that is the ICT Judas swing, simply put. As I said, in a moment, we're going to cover a case study to cover all of this, and we're going to piece it all together. But next, let's move on to step number 3, which is our entry confirmation. It's very, very simple. All we want to see is an injection of bullish pressure coming into the market. So once we've seen the liquidity sweep, once we've seen price deviate, run these sell orders, manipulate traders thinking this market's going to go short, running the sell side liquidity, all we want to see during a kill zone is an injection of bullish pressure, indicating to us that buyers are now present in the market, and therefore they should look to continue the trend to the upside. So all we are looking for is a bullish candle close indicating momentum that price, has collected them orders, and now we're going to start pushing to the upside. So our entry confirmation, if we are looking for longs, is simply a bullish confirmation. So very, very simple in terms of step number 3, which is identifying our entry confirmation. So now let's look at a case study of a trade that myself and all of the members within the Toto Capital community did execute within the markets. Okay, so let's piece everything together. Step 1, 2, and 3, so we can go through this case study and you can understand exactly why this trade was taken. So looking here, you can see based on step number 1, which is using our EMAs to determine our directional bias. You can see the EMAs are all sloping to the upside. They're all in order, indicating this is a buyer's market. We only want to be looking for longs on this market. So step number 1 is ticked, okay? We're looking for longs. Our daily bias is certainly just longs, and there's no real option to look for any shorts on this market. Now let's look at step number 2, which is identifying a session-based liquidity sweep in the form of an ICT Judas swing. So what you can see here is we have our Asian session. Okay, this is from 12 o'clock midnight until 5 a.m. GMT. So this is the Asian session range. You can see we're entering into the London session which is between 8 a.m. till 10 a.m. GMT. So what we're wanting to see is an ICT Judas swing below the Asian session low. You can see that we get a liquidity sweep to the downside right here, sweeping all of that sell side liquidity that was resting below the Asian session low. So during the London kill zone, we sweep this liquidity right here. we're taking out all of these orders. We're going to be trapping traders short, thinking that this is a breakout, when in reality, we understand that momentum is to the upside. So we are not going to be part of that retail, the amount of retail traders that think that this market is actually going to go short. Then we want to see step number 3, which is an injection of bullish pressure, indicating that buyers are stepping into the market. So we've seen the liquidity sweep. We've seen step number 3 right now in the form of this bullish candle indicating bullish momentum, confirming that this liquidity sweep is more than likely over. All we want to see is a break of this candle's high. Then we can look for a long trade to the upside with invalidation below the ICT Judas swing. So we've got invalidation below the liquidity sweep that swept these orders, and then we're looking to simply target a 1 to 2 risk to reward, or we can target opposing liquidity, which is in the form of the top side of the range. Okay, you can see in this instance that is around a 1 to 2 risk to reward. So let's play this on. You can see we're triggered in long right here, and we're just going to play this trade on. So during the New York session, you can see we get a further injection of volume, an injection of volatility, which ultimately allowed our trade to hit take profit. Okay, so during the New York session, the New York kill zone, we get further volume, which pushes our trade to take profit. So this was a trade that we took within the Toto Capital community. Myself and all of the members did actually take advantage of this trade. So this is on the gold market. Okay, this is on XAU USD. So you can see how all of the 3-step process comes together. Okay, in the form of step 1, we have our directional bias, which is to the upside based on our EMAs. Step 2, we see a session-based liquidity sweep in the form of the ICT Judas swing, running this sell-side liquidity right here. And then we get step number 3, which is a injection of bullish pressure during our London session kill zone, indicating buyers are stepping into the market, and therefore this liquidity sweep is just a fake out, okay? And this liquidity sweep is more than likely over, and then we have clear invalidation below the liquidity sweep and clear targets at a 1 to 2, targeting external range liquidity. So we've targeted the drawn liquidity, which was to the upside on this market. If you haven't already, make sure to join the free Discord. The link is in the description of this video for free analysis and to stay ahead of the curve for upcoming YouTube videos. If you're not in there, honestly, I have no idea what on earth you are doing. As always, guys, if you did enjoy this video, please subscribe and let me know your thoughts below if you have any other video suggestions or if you have any other queries regarding this strategy. As always, thanks for your time, and I will see you in the next video. Take care, guys. Bye-bye.